Hey everybody, this is True Demon, the Devil Stockbroker. We're talking about uh, latest market action. I've already spoken about this a little bit, but this market is currently not doing very well. We've got this double top pattern here on the SPY after we came back up from lows of 427. So now the real thing that I want to talk about first that has me royally pissed is this bullshit right here. So this is Sensionics chart, which, if y'all know, Sensionics was my main play that I've been in this since God, it was is March. I would say March of 2021, right after this big sell off here. I got into Sensionics because they're a biotech company that's developing a very special product focused on the treatment of diabetics. Um, what they're developing is a continuous glucose monitor. That's a device which reads the glucose levels in the blood, and it focuses on monitoring that and alerting to your smartphone. Now, what's unique about their device is, unlike their competitors, which use transdermal, that means through the skin, um, needles to read blood glucose levels, Sensionics has a basically a chip that's about the size of a grain of rice that gets inserted in the bicep with just a small incision. It's not even a surgical procedure. It's just a outpatient operation. You literally just have a small incision in the arm, put in the little device, and then close it up with some Steri-strips, and you're good to go for 90 days. Sensionics had an announcement for their FDA approval of their latest product, which now lasts 180 days. And at the same time, they also announced that although it was an unaudited figure, that they had beat their revenue targets with more than $14 million in revenue, and they were issuing guidance on how they plan to use that money going into 2022. And the stock has sold off 34% at the low. You saw how it was moving well ahead of the market way before this news. Somebody knew that Sensionics was going, right? Plenty of people knew. And then all of a sudden, the morning that it is announced, it just dies in a fire pre-market before anyone has a chance to get out of their positions. And of course, this volume spike rivals that of the squeeze that occurred back in what was this Christmas Eve of 2020. The volume spikes are pretty dang close. What this is telling us is that, well, somebody not only knows, but they also decided to pull the rug out on retail. And I've been focusing on this play for quite a while, particularly because I strongly feel that Sensionics is a fantastic company. What they've built, what they've created, the technology that they have opens up so many doors for not only people with type 1 diabetes for to be able to live a more I would I hesitate to say normal life, but a more active life, because type 1 diabetes does so much to restrict your diet, your lifestyle, any activities that you would want to do as just as anyone. If you want to go mountain climbing as a type 1 diabetic, that's a dream you'll probably never get to experience, because you can never be too far from your insulin, and you can never be too far from a hospital, and you can't sustain any kind of physical injury that would leave you with too many bruises, or you may be risking losing a limb. All of these factors that affect type 1 diabetics, it makes it so difficult for them to live a normal active lifestyle. With Sensionics continuous glucose monitor, that changes, at least to the degree that somebody is always able to constantly be monitoring their glucose levels. And the best part is that their device is only $100. That's it. It's only $100. Compare that with, and that's a product that was lasting 90 days. Now the new product is still about the same price and lasts for half a year. Dexcom, their nearest competitor, which has the G6 transdermal glucose monitor, is a needle that can only be inserted in the skin for 14 days maximum, but most of them don't even get to the first week. And 1 month's supply, according to that 14-day maximum, is $500. That's $500 for each of those continuous glucose monitor transdermal needles. It's a ridiculous price. And I'll just go ahead and compare Sensionics to their competitor in terms of their stock price. Back down here on the 1st of March, they were trading at $60. Dexcom at their all-time high was trading at $623.21, and they're currently trading at $422. And it's not a coincidence that since Sensionics started to perform really well, I think the Dexcom has felt some pressure from their partners. Look at this chart for a minute and keep in mind, respect the price scale. Respect the price scale. Sensionics, from the time that it IPO'd until now, is basically net neutral. Dexcom, from the time that Sensionics IPO'd until now, is a 526.95% gain with a total price increase of $351.60 a share. And Sensionics has a product that lasts more than 7 times as long. That's more accurate. That's more durable, and is able to read more than just blood glucose levels. Sensionics can actually read nutritional levels in the blood. It can read how much cholesterol you have, what your platelet count is. It's ridiculous how good their product is by comparison. And Sensionics has been overdue on literally every single FDA approval that they have ever applied for in the market they were since they IPO'd. Every single FDA application has been delayed. The last one was due in December 2 years ago. It was December of 2020 was when Sensionics' 180-day product was due. So now we finally get their IPO. They were trading all the way up at $3.80, and now it's come crashing down as soon as the news actually hits. The news that we've been waiting for. Guess what? It's fucking here. The news is here. It hit. And the price is cratered. How does that make any kind of sense? This is the biggest bullshit rug pull that I have seen in the market yet. Sensionics is a fantastic company. There's no reason that it should be trading 30% down since getting FDA approval on the most innovative continuous glucose monitor technology that has ever been produced to date. There is no other product on the market like this, and this is fucking bullshit. This is absolute bullshit. There is no logical reason. This is a fallacy of the financial markets. This makes no goddamn sense. There is no reason that this company should be trading at 30% down the day they announce FDA approval for their best product yet. It's going to change millions of people's lives. And I think Dexcom knows it. I think Eli Lilly knows it. I know that those fucks at Novo Nordisk know it. All of those major biopharma companies that have been monopolizing the entire insulin and diabetics treatment industry for the last 2 decades know that Sensionics can completely uproot their entire incumbency on the market. I don't know who holds these positions, and thanks to how little data is actually reported on these shorts, there's no way to know. There's no way to know who's actually facilitating these positions and taking these massive shorts against Sensionics. But I can tell you that their short positions have increased. I can tell you that they got slammed at critical moments, especially right now. I can tell you that a whole bunch of calls were bought on Sensionics way back here, back in late January, and that there were signals produced here showing that short exempts and a bunch of options trading started trading ahead of this, knowing that the stock was going to pump. So somebody knew at the FDA, somebody knew the FDA was going to issue approval more than a month in advance. They knew it, and they wrote it all the way up, and then they took out a bunch of fucking puts, thousands of puts, more than 3,000 puts in the first week of February against Sensionics. And then they took out a massive short position and they pulled the goddamn rug. And they did it here at exactly this moment. There is somebody out there that doesn't want Sensionics to succeed. And who the hell does it affect except the people who make the most money in this fucking market? So let's look at the average age and the number of loans. The utilization, we'll take that away, and we'll take away the short interest and lending volume for just a minute. So I want you to very carefully look at this. The number of loans on Sensionics was 334 back here when the average price was trading at $2, and then it started getting ridiculous. The the loans that have been taken out against Sensionics have continuously risen, just nonstop. There's somebody that's been betting against this stock since before May of 2021. It honestly goes even back way further than that. The original number of loans that spiked on it was, well, let's go ahead and actually we'll bring back utilization just for this. Utilization on Sensionics dating back to March during the COVID pandemic was above 90%. There was somebody that was betting on Sensionics getting absolutely smashed in the COVID crisis, and you know what? Somebody knew that COVID was happening too. There's a lot of people that absolutely knew that COVID was going to be announced. That was also documented, and we can make all the assumptions that we want. We can speculate all we want and throw out conspiracy theories, but it's just a fact that Nancy Pelosi and many members of the Senate and the House of Representatives in the United States took short bets on the market, knowing that COVID was going to be announced, and many of them pulled their long positions on stocks that they had been in for years before the COVID crash happened, and they did that as early as February 15th. So, and it's not a coincidence that former President Donald Trump had been talking heavily about different pharma plays. I remember that he spoke in the Rose Garden and mentioned very specific tickers such as CVS Pharmacy, and partnerships with Pfizer. He mentioned those stocks specifically, and then the market closed, and after the market closed, literally 5 minutes after the market closed, he said, "By the way, COVID pandemic is a real thing." And then all the stocks crashed in post market. It gave everybody a chance to get out of their positions at a high price, and then all of a sudden the rug pull. And then we went into the COVID pandemic. It was that was finally what made me lose my mind after all of what had happened, and I started paying real close attention to the stock market. And of course, then y'all know the story about GME back in 2021. But anyway, Sensionics, the amount of loans was at their highest right as the pandemic hit its worst point, and then most of those shorts got out of their positions. And then it was only once they started talking about once Sensionics talked about uh, their FDA application for their 180-day product, which was announced in November. They were expected to get approval at some point in December, um, but it never came. And the FDA kept citing delays, saying we can't. We're too busy with COVID, too busy with COVID, too busy with COVID, over and over and over again. The whole time, all these loans, this gray line that you see here, rising and rising and rising. The average days on loan rising and rising and rising, and of course the utilization spiking at uh, just to ridiculous levels just moments before Sensionics made its big move in June. So there have been shorts that have been holding on to their positions since Sensionics was trading sub $2, and they're hurting. They've been hurting. And it's not a coincidence that the loans continue to increase the entire time. Somebody really, really hates Sensionics that does not want to see this company succeed. That is, I firmly believe that.